If you just recently formed an LLC, you might be wondering, how do I pay myself properly? So that's what we're going to talk about today. Let's do this. So I started my life as an entrepreneur way back in 2005. Hard to believe it was that long ago. And up until that point, I had been receiving a paycheck for my entire adult life. When I was like 30. It wasn't like I was that old. But I had been receiving a paycheck for my, up to then, that's all I'd ever really known. I'd never really had a business that I owned that was just my own, where I was the one that was getting the business and then paying the expenses and paying myself whatever profit came in from the business. So starting my first law firm was really an eye-opening experience for me, from the standpoint that I wasn't sure how to do things correctly. And so just like you might be sitting there wondering, well, I just started this LLC, how do I pay myself? What do I do? Do I just write myself a check? Can I pay my bills out of my business account? Do I need to sign up for payroll? You might be wondering, how do I handle all these things? And probably even more importantly than that, you might be wondering, well, how much do I actually pay myself? What's an appropriate salary? How do I minimize my tax liabilities? Am I doing this all the right way? These are the things that I was thinking about when I started. Can you relate to any of this? Does any of this sound familiar to you? I bet it does. And whenever you started your business, you probably thought to yourself, business isn't supposed to be this hard, at least when it comes to the money side of things. But it is. It's tricky. It's hard. You don't know what you don't know. And so hopefully I can shed some light on that here today for you. The reason I want to talk about this is because I used to struggle with all these issues and all of these questions. And then I figured out that the process of paying yourself from your business, if you have an LLC, is not actually that hard. We just think it's hard, and we make it out to be a lot harder than it needs to be. But, and there's always a but, isn't there? You have to do things the right way, and you have to do things the legal way. Otherwise, you can get yourself in all sorts of trouble with the IRS and the state taxing authorities and all sorts of places. And you don't want to do that. So let's make sure that doesn't happen. What I want to do today is I want to share with you my 3-leveled approach to how you're going to pay yourself from your business. And each level is a different income level that you are at with your business. So level 1 is going to be the lowest, level 2 will be middle, and then level 3 is going to be the highest. And we're going to talk about how you should look at paying yourself when you're in each one of these levels with your business. So level 1 is the foundational startup level. This is where somebody is just getting started with their online business, where maybe you just formed an LLC, you don't have any revenue coming in, you don't have any clients, and you've got some expenses, but as I talked about in a video last week, the expenses to start an LLC and to start an online business just in general are not, we're not talking about life-changing money here. We're talking about maybe $1,000, $2,000, you can get an online business started, which is ridiculous, because if you think about it, 20 or 30 years ago, if you want to start a business, you had to have $50,000, $100,000 in the bank just to get your foot in the door. So things have changed quite a bit. You can start an online business with very little money. And so when you're at this startup stage, in all likelihood, you're probably still working at a job. You might be doing this as a side hustle. Or maybe you have 6 to 12 months of expenses saved up in a bank account that you can live off of while you're devoting all your time, energy, and whatever limited financial resources you might have to building this business. So at that point, when you're not earning any income, you're really not paying yourself a salary. And it's interesting because I get a lot of people that do ask me about this who are at this level, and they want to know, well, how am I supposed to pay myself from the business if I don't have any revenue? Well, the answer is pretty simple. You're not going to pay yourself from the business. In all likelihood, you're going to be putting money into the business rather than taking money out and paying it to yourself. What you need to do at this stage is just make sure you're not commingling any assets. So you've got your personal bills over here and you've got your business accounts over here. You want to make sure you're depositing money into your business accounts and then using the money that you've contributed to pay your business bills. And the biggest thing you need to worry about at this point is how are you going to categorize that money you're giving the business? Is it a shareholder contribution? Are they startup expenses? Are you giving a loan to the business so the business is going to pay you back? And you might want to talk to an accountant about this to make sure you handle all that correctly. There is going to be an effect on your tax bill at the end of the year if you do it wrong. So just make sure that that's really what you need to be thinking about at this first foundational level, which is level 1, which is basically you're not going to be paying yourself a salary. You're going to be putting money into the business, and hopefully you're going to see a return on your investment at some point very soon, which will lead us to level 2. And level 2 is where you're starting to earn some money in the business, and you're earning up to about $25,000 to $50,000 in net profit. Now, at this point, you do not need to elect an S Corp tax status. I talked about this in a previous video, but when you're at $25,000 to $50,000 in net profit from your business, an S Corp really is just going to be more expense than it's worth. So you really don't need to worry about doing this at this time. The cost of setting that S Corp up just doesn't justify the financial benefit that you will get from it. You're gonna have to hire an accountant in all likelihood to help you with your taxes. You're gonna have to file an extra tax return for the S Corporation, and you're probably going to need to set up a payroll service, which is going to run you somewhere between $500-600 a year. Usually they charge on a monthly basis. So the total cost for all this, you're looking at easily $2,000 to $3,000 a year just to have that S corporation. And if you're not saving at least that much in your taxes, then it really doesn't make sense to do that. So what do you do instead? Well, I'm taking a situation where, and I just, full disclosure here, I like to follow the Profit First methodology by Mike Michalowicz. And a very basic level, when you're just getting started, the allocations that he typically recommends for a business that's earning anywhere from $0 to $250,000 per year is for every dollar you make, you're going to contribute 30 cents or 30% to your operating expenses. You're going to contribute 50 cents to your owner's pay. You're going to contribute 15 cents to taxes and 5% to profit. And that's the way I like to look at it, especially when you're just getting started as a startup. If you follow this Profit First system, and I highly recommend, I'll include a link down below that you read Mike's book on the Profit First system if you're wondering what I'm talking about here. I've also done another video, I'll include a link right here on the Profit First system. I highly recommend you follow this, because what happens when you follow the Profit First system is you know exactly how much you're going to pay yourself at the end of each month. So that second question I asked at the beginning, how much do you pay yourself? Well, the Profit First system will answer that for you. If you start to get out of whack and you're spending way more on expenses than you should, the Profit First system is going to help you to rein in those expenses as well. Also, if maybe you're spending too little on expenses and you need to invest more into the business, you'll know that as well. So it's important to figure out what your baseline number is, and that's one of the first exercises that Mike will have you do in his book, Profit First. So you do that, figure out what your percentages are, and then figure out where you need to adjust for your business as you're going forward and you're first starting to earn income from your business. Now, in terms of how you actually pay yourself, this is the question I get, and a lot of people really struggle with this. You're going to pull out a checkbook, you're going to write a check to yourself, and you're going to take that check and you're going to deposit into your personal bank account. Do not pay your bills, your personal bills, out of your business bank account. Do not pay your business bills out of your personal bank account. Do not deposit business checks into your personal bank account. Just make sure the biggest thing you do here is when you need to pay yourself from the business, however often you want to do it, whether it be once a week or once a month or once a quarter, take a distribution from the business and deposit it into your personal bank account, and then use that money to pay your personal bills. That's the way you're going to do all this. And I highly recommend that you keep a business bank account at one bank and your personal bank account at another bank, and keep them completely separate. That way there is no chance that you can commingle these funds, and it makes it even harder to transfer money between accounts, and it really forces you to use a check, which is what I really recommend. And especially in this day and age, like literally what I do is every Friday I write a check to myself from my owner's pay account, and I just snap a picture, and is deposited into my personal bank account. And then I have those funds to use for groceries for the weekend and things, for whatever we need it for. Are you with me so far? I'm gonna take a quick sip of coffee. And while I do that, take a minute, leave a message in the comments. Let me know you're with me. If you're not with me, let me know what you're struggling with. All right, coffee time. Need to warm it up a bit. It's a bit chilly. Now we're up to level 3. Level 3 is where your profits are actually exceeding $50,000 per year. This is where you start to get serious about your business and about the finances related to your business, where you first need to start thinking about electing to be taxed as an S corporation. Now, I'm not going to go into the whole spiel about what an S corporation is and all those things now, but suffice it to say, what you need to know is that an S corporation is not a business entity. It is a tax election that you can make if you're an LLC or a C corporation. You can't do it if you are a sole proprietorship. The second thing you need to know is you need to make that election within 75 days of forming your LLC or by March 15th of the calendar year that you want to elect that S corporation. That's basically what you need to know for purposes of today's video. I've done lots of videos that talk about S corporations, their benefits, their drawbacks, all sorts of things. You can check those out, but for now, that's what you need to know. But when you start to earn more than $50,000, now you need to start thinking about electing that S corporation tax status. When you do that, I still recommend that you follow the Profit First recommendations in terms of how to allocate your money each month into operating expenses, taxes, profit, and owner's pay. Those are the 4 main categories of bank accounts that you want to have with the Profit First system. Highly recommend you follow that. That way you know exactly how much to pay yourself at the end of each month. To take advantage of an S corporation and to do it properly, you need to make sure that you pay yourself what is considered a reasonable salary. Reasonable is one of those legal words that nobody really knows what it means, but we know what it doesn't mean. We know what unreasonable is. For the most part, when we're talking about a reasonable salary from your business, we're talking about somewhere in the 30 to 35% of your gross revenue range. Now that could change. If your expenses are way out of whack and you've got like a 10% profit margin, then obviously that's not going to make sense. And conversely, if you have like a 95% profit margin, then maybe a reasonable salary is going to be higher. So it really just depends. But if you're using the Profit First system like I talk about, then for every dollar that you're earning, 1/3 of that dollar is going towards your expenses, 1/3 of that dollar is going towards your profit and your taxes and things of that sort, and 1/3 of that dollar is going towards your salary. So if your gross revenue per year is about $100,000, then a $30,000 to $35,000 a year salary on your part should be considered a reasonable salary. Talk to your accountant about this, make sure that you're doing it the right way. But these are just general numbers. I'm not saying this is right or wrong for your situation, but take it with a grain of salt. And as I said before, the more your revenue and the larger your team, the lower the percentage that you would need to take. The lower your revenue and the fewer people you have on your team, then the higher the percentage that you're going to take. Now, in terms of how to exactly take a salary and the timing of it, you can do it as frequently or as infrequently as you want. There are some people that take a salary once a year. There are some people that take a salary once a week. Personally, I do a salary once a month. I find that that's a nice cadence to do my calculations and figure out what I want to do. And it also balances nicely with the fact that every time you run payroll, your payroll provider is going to charge you for that privilege. So if you're running salary once a month, then you're going to spend $40-50 on your payroll 12 times a year, and that's fine. And you don't have to run salary every month. You could run salary once every couple months if you wanted to. The nice thing about an S corporation is when you are running salary, really all you're doing is having the payroll provider debit your account for all the payroll taxes that you need to pay. Because what you can do is, in the meantime, you can be taking distributions or advances, and then you can add those onto your paycheck and say that you already took this money, and so they're not going to debit you for the money that you already took. They're only going to debit you for the payroll tax on the salary. So you might say to your payroll provider, well, I want to pay myself a salary of $10,000, this pay period. And let's say for a salary of $10,000, the taxes on that are, let's say, $2,500. And then the net that you would get after you pay all those taxes would be $7,500. Well, you could have already taken that $75 out in the form of profit distributions, but you're just telling the payroll provider, run a salary for me at $10,000. I already advanced myself $7,500. So all they're really deducting from your bank account is the money for your taxes. And a lot of people get really confused about that concept. I know when I was first starting out, I was confused by that concept, but that's basically the way it works. Now, speaking of payroll providers, my preferred vendor for getting your payroll done is Gusto. I've used the other ones, the national companies that I'm not going to name here, but you probably know who they are because you probably received paychecks from these companies. And but I have found that Gusto is absolutely hands down the easiest to use, best. They've got great technology. I've been using them for several years now. I don't know that I'll ever go back to another payroll provider. You can use my affiliate link at hawthornlaw.net/payroll. I'll include a link down in the description below to sign up for free. And when you run your first payroll, Gusto is actually going to send you a $100 Visa gift card that will come in quite handy just in time for the holiday season. So feel free to sign up. Again, it's hawthornlaw.net/payroll. And get started with Gusto because it's pretty freaking amazing, let me tell you. If you'd like to learn more about that S election and how to pay yourself from your business, I've done a few videos. I usually do one video about a year on this topic, covering different aspects of how to pay yourself in your business. But here's the most recent video I did right here. Thank you so much for watching, and we'll see you in the next video. Take care. Bye-bye.